All right, Robert,
Sir,
the fall flop is looking quite scary. And I think this is going to be something very concerning for our real estate chat viewers.
well, anything that's a flop would be concerning, but if it's just easy come, easy go, don't worry about it.
Well, you seem to think pretty lightly of it. So, on this episode of Real Estate Chat with
Robert Eid.
and Jandra Perez, we're going to see if it is a fall flop or, as Robert put it, a fall fade or just normal. We're going to see. We're going to find out. So, we are a bit over mid-month as we're recording this. September 20th is the recording date of this Real Estate Chat episode. Make sure you click on subscribe so you don't miss any of our episodes. And we're going to go through some preliminary numbers. These are the actual numbers being recorded. And then we're going to get Robert's insights as to, is this going to flop? Is it going to fade? Is everything going to be okay? Let's start, Robert, with how sales are looking like so far. So take it away.
Well, if you look at the X's that are running across, and so we got the 21st, 25th best September out of 28. So it's a lousy September. If you do a calculation based on 5 years, it's like 45% below the averages, and never mind what the maximum is, very below. And it's a little below last year. But this year is not last year, and this year is not anything other than a reaction to a boom. So it's an unboom. And you know the rally that everyone was so excited about in the middle of February and the March, April, and middle of May? Well, this is the opposite of that. This is where the balance comes, so that we end up with the same about 77,000 sales for the year. The average price ends up about the same place as it was, which is, if you've been looking very carefully, is what all of the safe, not sorry, don't stick my neck out people have been predicting. So safe, not sorry may turn out to be accurate. Well, they got to be accurate every now and again, just like the crazy uppers are right every now and again. The crazy downers are right every now and again. So it's a time where you can pick and choose. Listings are coming up. And if we look at it, well, let's look at it now. You got first-time buyers, you got nothing to sell. Last-time sellers, you got nothing to buy. Move to buy to sell. Trade up buyers, they're trying to do something, but they're being very cautious. Investors who are underwater, they are selling. Investors who are in good shape, they're just hanging on to it, letting the tenant pay for the mortgage.
So when we look at your patterns here before, well, the patterns of the historical sales, typically we see September above August, and only twice on this chart it shows as below August, which was 2022 in the red. So
Yeah.
September dipped below August, and then
Yeah.
now
Yeah.
your best based on your estimate at this point, it's
Well, you're paying for August and September, as people accelerated their purchases. So don't worry about it month by month. It's where are we on the trend? Where are we compared to the trend? And that's the important thing. We used to be 30% under for the whole year. We've been 30% under, except for the boom when we were down to like 14% under, but we're still below the average. Now we're 40%, 41%, 45% under the average. So maybe it'll snow tomorrow.
well, I mean, there you go. I better get the snow shovels ready. But as you put it, maybe the winds are out of the sails, or buyers are exhausted at this point. And with the multiple rate hikes that have happened, we've mentioned this in past episodes. Make sure you watch our previous episodes. We see that on this chart. That where could it possibly go when all of the exorbitant buying has occurred in not so distant history? And so let's look at what the story of active inventory looks like, because Robert, for those of you real estate chatters who have been watching us for a while, you've always seen, you've seen this for a while. And then where are we sitting now?
17 and a half. So we're above average, and both the 5 and the 10. And I think almost everybody would agree. We have to look at it a little more closely. Is it condos? Is it in 905? But the overall number of listings, and which I have that, I'll have to have a breakdown for you next time of which inventory is going up, which number of sales are maintained. So if you look at this whole thing, 25,000 was the number of listings a while ago, and 20,000 was the listings a while ago. So we were crying because inventory was down, and because inventory was down, there was nothing to pick from. And so the people who were buying had to pick from a diminished supply, and the people who had the diminished supply knew they were a diminished supply, so they didn't move their price. And so prices were maintained. When you get into more of official buyer's market territory, then things may change.
Oh, what's interesting is the buyers got what they were praying for, right? Any buyer sitting on the fence and, they were losing out in multiple offers and the bidding wars and in the tight inventory. And, you had to have that bank draft ready to go and you had to go in firm in all of your offers. They're getting what they want. But the irony is, I guess it's the FOMO irony, right? Fear of missing out. So when you see everybody buying, that's when you want to buy. Now that you've gotten what you wished for, we're looking at sales, and in terms of sales translated to months of inventory, what does that work out to be?
Okay, I'm going to say just one thing first. What
Sure.
people wanted was lower monthly payments. If they had to pay more, they would pay more because they were financing it at 1, 2, 3% interest. Now that they have to pay for it at 5, 6 and qualify at 2% more interest, they don't like it. And if they're not forced to, then they're not going to. It's all about the interest rate. It's not really so much supply and demand as interest is affecting these things that cause the buyers to retreat, cause the listings to be pushed up. And here we see we're going up for the first time in a long time to almost 3.93, 4%, or I'm sorry, 4 months of inventory. So 4 months to me is the break even of when there's too many houses on every street. But the change to go up 1 month in 1 month, 1 month of inventory is surprising. And everybody just got the same idea at the same time. And you hear the folks downtown saying, oh, the condos are flooding. The condos are flooding. So again, I better have a hard data on, is it all condo listings? Is it all, somebody bought an investment in Clarington and now they're dumping? Like where is the mix changing, and where is the mix out of proportion? So, but it's something we got to watch for the rest of the month.
Well, it's going to be a good analysis, and I think that's a great and prudent thing to investigate, Robert. Right? Is because when you're seeing the average go that high, well, I mean, based on the conglomerate data or all the data we put together, this is what we're looking at. So it'll be interesting to see, because if 4 months of inventory is everything put together, there will be some areas with probably higher months of inventory, and there will be some with a bit lower months of inventory. But Robert, on a serious note, not that we've chatted about was not serious or less serious, but when you see such a spike in these numbers, what I'm talking about is in such a short time span, inventory has jumped. In such a short time span, the months of inventory has jumped. That obviously signals, correct me if I'm wrong, some sort of a reversal in the overall trend of where the market is going. What do you foresee happening? I'm not saying you should pull out your crystal ball or anything, but if you were to play this out into the end of the year and then leading up to the busiest market, which would be spring 2024, what should we anticipate for any real estate chatters who are at this point now thinking of how are they going to enter the market, or should they just, watch and see where things go?
Well, they should consult with a broker or salesperson. Registrant is the name we use for everybody, that was active in the fall of 1989. Because in the fall of 1989 was actually when he had the highest price ever recorded in that whoosh. And then the spring didn't come. And the spring didn't come for a variety of reasons: prices, interest rates, confidence. And it may be that this is going to be a great time to be a cash buyer. It's going to be a great time to negotiate what we call creative financing. It's going to be a great time in the last quarter of this year to sell your property that you deem to be excess. If you're not living there, it's excess. Sell it. And next year will take care of itself.
Interesting times ahead. So if you like this episode, make sure you click on like and share in your comments what you feel about the market, what you're experiencing, and how you're navigating through it. If you have any questions, feel free to leave it in the comment section. Thank you for watching this episode of Real Estate Chat, and we'll give you the market update in about 2 weeks when it gets released, beginning of October. Take care and bye for now.
See you later. Bye bye.